bbc.co.uk/5live.
Companies in the UK may finally be finding it easier to get access to finance. That's the verdict of a study out today from the body that represents UK manufacturers, the EEF. Access to finance is a topic we've covered many times here on Wake Up to Money in recent weeks and months. We've heard from a variety of different people as to how important it is to drive the economy forward and kickstart the recovery. Here's Adam Marshall from the British Chambers of Commerce.
What we do need to see is business lending. We also do need to see those new and growing companies getting the money. If a business is ready, if it's got a viable proposition, it should have a good crack at getting the credit it needs.
Here's Mike Cherry from the Federation of Small Businesses.
The amount of businesses that are able to get access to finance is not going in the right way at all. And of course, if they can't get the access to finance, they're just not going to get the money, which is the oil of the whole mechanism to make it go round.
So what's changing? In a moment, we're going to talk to Lee Hopley, who's Chief Economist at the manufacturers organisation, the EEF. Good morning, Lee.
Morning.
But first, let's talk to Jim Griffin, who's the Managing Director of the Rugby-based firm Automotive Insulation. Good morning, Jim.
Good morning.
Tell us a little bit about your business and what it does, first of all.
Yeah, we're based in Rugby. We predominantly make cars quieter. We make all the acoustic insulation that goes behind your trim in the vehicles.
Right, OK. And how does it work? How does it insulate the sound?
Complex, really. Basically, the products that we put in will block the noise from the engine coming through into the vehicle. We can mask the noise within the engine area so people walking by the car hear less noise. It's a various materials that we put together that we buy from across the globe that make up the whole package for the vehicle. And
clearly it's a good proposition. You're selling well.
We're doing very well indeed. I mean, the last 6 years we're 168% up from when we did a management buyout. We're growing 30% year on year at the moment and still growing into the future.
And do you need finance to expand?
Absolutely. And we've been very, very lucky with the supporters we've had with our financing. GE has backed us all the way through the recession. And recently we've been using RBS and Lombard's and Regional Growth Fund grants.
I'm sure I heard a bank included there somewhere. Just tell me about these various different sources of finance. You said GE.
Yeah, GE we use for invoice discounting. They provided that facility right from day one 6 years ago. Even during the recession, they sat down with us and said, look, tell us the truth. Where are you really going to be? So we fed them information on a weekly and monthly basis. And they stuck by us because we told them the truth.
It sounds like a proper old-fashioned sort of financial relationship like the one you used to have with your bank manager. What about with the banks, though?
Yeah, with our bank, who we were previously with was Lloyds. We've just moving from Lloyds at the moment. They never really came to see us or gave us much support. I put out a plea a few months ago for some money for some new machinery, and RBS heard that I was asking about this at a LEP meeting. Within 2 weeks, we had an offer on the table to fund the machines.
So they were really actually quite keen to lend to you.
Yeah, very hungry, and they are behind us still even further. They are coming up with ideas. They're coming up with people we can make contact with to use other financing sources as well, not just the banks.
So what would you say when you hear about the drying up of finance? Would you say it's a general problem? Would you say it's down to the individual banks, or what's your assessment?
I think there is a problem where there is a difference within the same bank sometimes with their own managers' interpretations of their rules. But generally, I think if you've got a very sound business plan that you understand inside out, not just the figures, but also all the risks that are involved, and you can explain those to your funder, you've got a much better chance of getting the money.
Oh, well, that's interesting, Lee. So to what extent are they risk-averse now, the banks? And to what extent... I mean, because it sounds like a business like Jim's isn't particularly risky because he's doing so well.
I think banks' appetite for risk has certainly changed since the financial crisis, and that's manifested itself in lots of different ways. I think Jim was lucky to have a good relationship with one of his finance providers during the downturn. I think that wasn't the experience of a lot of SMEs, and that has impacted the way they view their relationship with their bank, and it is impacting on demand and the ability to go out and look for credit.
Jim, can I ask you how much you're paying in terms of interest on your loans?
Yeah, we're paying just over 4% at the moment.
So that's pretty competitive then?
It is very competitive, yeah.
And Lee, that doesn't sound like there's much of a risk premium in there.
No, I think I mean, what we see in our survey today is that the overall cost of credit is still going up for a balance of companies. There are other indicators in our survey which do suggest that there is hopefully some signs of light at the end of this particularly long tunnel. But it's not just about the rate on borrowing, it's also about some of the other costs and terms and conditions that are wrapped around those borrowing costs as well.
How does it work in terms of the banks actually getting in touch with companies like Jim's? Because we heard there of how when RBS heard that Jim wanted to get some finance, they were knocking on his door almost. How does it work in terms of that relationship? And is it the companies usually going to the banks, or are the banks actually actively getting out there and saying, we want to lend to you?
I think we need to see more companies getting in the driving seat and managing the relationship with their bank. I think it's extremely patchy when you look at individual banks and their willingness to get out and network and get into the market to generate business. I think some of the government schemes that have been put in place, the Regional Growth Fund was named there, but we've also had previous guises of the National Loan Guarantee Scheme and now funding for lending. Those should be real hooks for banks to get out and speak to businesses, and for businesses to go and speak to their bank as well about what's available.
I mean, the only thing, Lee, is we had this awful manufacturing data last week, which seemed to indicate that we are heading for a triple-dip recession. If I was a banker, I'd be thinking, well, it's kind of risky to lend to a manufacturer right now.
I think this is absolutely why banks need to understand the real economy. Manufacturing isn't one homogenous sector. There are lots of companies out there that are still doing extremely well, sectors that are bucking that wider manufacturing trend and still looking at growth opportunities in the year ahead.
But Lee, your industry does seem to run hot and cold all the time. I mean, we've had sort of optimistic noises from the EEF in the past, and all of a sudden it says, oh, we're a bit more cautious now. When are we going to see some consistency?
I think that's extremely difficult to call given the uncertainty in the external environment, and I think that's one of the things that's really driving the numbers down, what's happening in our key markets, particularly in Europe at the moment. I think if you, again, look at our survey, quite a lot of companies are looking to invest and they expect their demand for finance to increase next year, and that's something, particularly investment, that can't be delayed indefinitely. Companies want to be competitive in the medium term, they've got to be investing now.
Well, I mean, Jim's story would suggest that it's not so hard to get hold of, but what is your assessment of the funding for lending scheme? Has that improved matters in terms of the money actually getting lent on to individuals and businesses?
I think it seems to be clear that it's feeding through to individuals and households through mortgage lending. It's difficult to say what impact it's having on business lending. The scheme's only been up and running for 3 or 4 months. And there are lots of factors that could be impacting on the slightly better data that we're getting through in our survey. But funding for lending and the previous National Loan Guarantee Scheme could be playing a part there.
OK, well, final word from Jim. Jim, if you had one wish as to what policymakers and banks could do in order to make it easier for businesses like yours to expand, what would it be?
Give us the access to finance for European expansion. I had some money withdrawn when I set up our company in Gothenburg this year. So it'd be nice to be able to deal with a UK bank to explore overseas markets.
Very interesting. Thank you very much for coming on. Jim Griffin there from Automotive Insulation, and we also heard from Lee Hopley from the